and wanting to get to the depth.
They are much more talented. They are much more creative and innovative. And they are bringing a sanity in overall discourse that we are currently creating and consuming.
Welcome. You're watching India Market Open, and it's going to be an interesting and important day for the markets. In case you're wondering, yes, we are celebrating Women's Day here at NDTV Profit a day earlier. Women's Day, of course, is tomorrow, but it's going to be a markets holiday.
Yeah.
So,
should I have worn pink? Is the question.
Of course.
Sure.
Undoubtedly.
Maybe after this show.
As long as the mood is not red on the markets. A bit of a scare through the day yesterday and recovery during close. But that overhang still very much there.
Yeah, and individual portfolios hurting badly. So I think that's the problem, that while the large caps may be doing what they're doing and recovering, the broader end of the spectrum is taking another chin. We'll talk about that in detail. But yeah, a happy Women's Day. Hopefully, portfolios for women, men, everyone alike recover a little bit from the kind of gashes that they had yesterday, especially at the broader end.
Correct. And watch out for a lot of specialized programming we have about investments, building your portfolios and assets for women. And of course, the same applies for men as well. But let me begin with a very quick wrap of what's happening globally. Recovery in the global market. So that might have some succor. After three, weak trading sessions, US markets did recover. All the indices did. Of course, the big move there was because of Powell speaking. And Powell said exactly what was expected. In fact, a lot of his statements in front of the Finance Commission were lifted straight from the last monetary policy, and Fed statement. So that shows you that he stuck to the script, that there may not be any big changes. June is the date penciled in, or the month penciled in for the first cut. And the market is thinking that that's what's going to happen. I'm just going to run a quick quote of his where he again reiterates that you will see a cut this year. He's waiting for data, so nothing really changes. Bonds took it positively. Your 10-year was at 4.1 levels odd, so an improvement over there. Another factor that is building that up is the jobs data, the private jobs data, which has come in a little lower than expectations. So that's telling you that the U.S. Economy is not quite overheating overall. Crude is the other big story. Crude prices going up because of the expectation that interest rates will be on track. As a result, Singapore GRMs have shrunk a fair bit. So watch out for impact on OMCs this morning, Indian OMCs. That might not be a very, very good picture for them. Asia is doing well, at least in the morning trade was good. Nikkei overall started up well, but has now slid a bit since we saw last. So that's the setup. Mixed picture for Asia. Over here, I think the overhang and the pressure on the broader markets is going to sustain for some time because there is so much regulatory direction on controlling that quote-unquote froth.
Yeah, and you're very right, Tamanna, and frankly, that's what's playing out, right? I mean, there's some measures in conversations yesterday about how the Nifty may continue to do what it does, which is move up, and the broader markets may continue to fall. So, new highs on Nifty. Short positions existing, by the way, viewers, keep in mind, because if you look at the call strikes at 22,500 and 22,600, they are still very, very high. And therefore, if the index were to inch higher, which is the point that we've been making, 22,400, some bit of covering now, if that happens, and if that happens swiftly, don't think it will, but if it were to happen swiftly, then you will actually keep on seeing these upticks happening because of short covering on the index at large. The problem, though, is not the index as much. The problem really is at the broader end of the spectrum. Portfolios, individual portfolios are getting badgered out of shape. You talk to almost any investor who is invested across the SMID space, and retail investors, even HNIs are that. Those continue to get badgered, even as, by the way, volatility keeps on falling, right? 6th day on a trot now. We've had India VIX come off, but that hasn't helped individual portfolios. So that's the point I'm making, that the index at the headline level is looking okay. It may not look okay, depending on what the oil and gas names do, but broader markets not looking great. Now, yesterday, amongst sectors that we were talking about, we spoke about cement and how there is a bit of a pullback that is coming up in cement, pullback that is coming in cement in a meaningful way. Look at the short positions added on to what was already existing. So yesterday's session as well, Ramco, which was down about 2.5%, added 24% OI. A significant short build-up on Ramco, which already had a short build-up the previous day and had fallen as well. Ultratech down 2% yesterday, about 12% OI build-up. And YTD performance for some of these stocks isn't the greatest either. And we'll talk about that a bit later on maybe on editor's cut. But, cement continues to wobble. And therefore, there's this, yesterday, Tamanna, the issue was that while maybe IT did okay, maybe banks did okay, but a clutch of economy-linked spaces, the Adani twins, cement names, some of the auto names, all had a large corrective move within the headline number of the Nifty looking okay.
Yeah, it's broadly seeming like a bit of uncertainty over what the next step will be, which company is next, what's next. Is that kind of maybe overhang? But remember, it might be a bit painful in the short term, but having a clean, robust capital market is key. So think of it as a jab of a vaccine or some such. But let's get to stock specifics. And your large caps are in focus. I'm going to begin with Tata Motors. Tata Motors has constantly been in the news. We've covered it. It's seen a bump up over the last few sessions as well because of their demerger plans. And Moody's has now come out and affirmed their long-term rating at Ba3 with a positive outlook after the demerger has been announced. They say that the CV unit will generate substantial earnings, and I thought this was interesting because all the focus seems to be on the PV/EV kind of play as far as Tamo is concerned. But the CV unit is very solid and strong as well. The cash to service debt obligations is something they're talking about. They say the proposed structure will optimize synergies across PV and EV businesses in India and JLR, and all units will deliver strategic growth priorities while maintaining a balanced financial policy. The other stock, and we're going to go through a lot of them today, business updates have started trickling in, so we'll cover a few of those. But I want to bring your attention to Adani Enterprises. Their Dubai unit has acquired about 100% stake in LMDF for 5,000 euros. Now, this is a duty-free SAS. So it's called Les Marches Duty Free. And as your airports, play increases, all of these add-on services will be accretive and quite important. So that's one I would watch out for. Morgan Stanley is another one which has bought into Zomato, and which is why Zomato is the next sort of stock on my list. Remember, Antfin Singapore Holdings sold about 2% stake at 160 rupees 0.4, but Morgan Stanley Asia has bought 5.68 crores worth of shares. That's about 0.66% stake in Zomato at 160.1. Zomato also, for various reasons, and we've spoken about this on the show before, long-term play, turnaround and paths to profitability perhaps looking clearer. Obviously yesterday they didn't have a great day, but then a lot of the market didn't, a lot of the broader market didn't. Zomato would be perhaps one. But
well absorbed. Yeah. There's a large block yesterday for Zomato, well absorbed. So on a block size like this, if you told anybody that it'll be down 2% end of day, I think most people would take it with both hands. Yeah. So pretty decent performance now for Zomato.
I think so. I think so, definitely, and one that you should keep on your radar.
Most certainly. The other thing that Tamanna spoke about, which is what could happen to oil and gas names. Now, here's the reason. Singapore GRMs have dropped to $4.5 per barrel versus about $6.9 per barrel YOY. This is the lowest number since November 27th, 2023. And therefore, watch out for Chennai Petro. Big impact on that one. Watch out for Reliance. Watch out for oil marketing companies. All of these tend to get impacted when this happens. In fact, if I'm not wrong, and I'll just take a second here to just pull up what my statistics would be. All right, so for stocks, right, for Chennai Petro, this every $1 drop in GRM lowers EPS by circa 25 to 30%. For IOC, BP, HP, it decreases earnings by close to 15% as well. For Reliance too, about 3-4% impact. So you actually have impact on Reliance, OMCs, Chennai Petro, maybe MRPL. So watch out for all of these names. Could be active for the wrong reasons in the session today. So that's the one pocket you need to definitely watch out for. Tamanna would have spoken about Mahindra and Mahindra as one deal, which is an important one because there is a block out there from the promoter. May not be too much of an impact, but keep in mind. But NLC India was interesting too. I thought the government is going to sell up to 9.71 crore shares, including green shoe option by OFS at 212 per share. The price is at about a 5% discount or slightly over that. So do keep an eye out for NLC India in the session today as well. And before I hand it to Tamanna, maybe just maybe, car trade could be an interesting one, because while Springfield has sold about 6.32 lakh shares, that plus others were bought over by ICICI Prudential Mutual Fund. So they went lock, stock, barrel out, not a very large quantity for them, but they bought significant stakes in car trade yesterday, ICICI Prudential. So could be an interesting stock to monitor today.
Yeah, just a couple more which have business updates coming up, and Bajaj Finserv is one of them. I wanted to put that on the radar because the Bajaj twins have had a couple of rough sessions for various reasons, but their Fed business update says that gross direct premium underwritten is 1294.8 crores, while new business premium is 1,050 crores. So this is a bump up of about 11 to 13% year on year. It's okay. It's not spectacular. So which is why, of course, business updates just give you the tip of the iceberg, but one to look out for. The other one really where you have seen another business update is all cargo Gati, where there has been an improvement in the month of Feb, and the volumes have gone up to 104 kilotons, about 15% up year on year. And I was interested in this one because you have a lot of overhang of what's happening in the Red Sea. Will that have an impact? Was the other question. I found HAL also interesting, and just I want to bring HAL to your attention. The company has signed an amendment to its LCA with IOC, with Indian Oil Corporation. The value of the contract has been revised, and it's a hefty revision. Look at that. It's gone from 2,700 crores to 5,077 crores. HAL anyway has been quite a solid play in for a long-term perspective. In a month, up about 10% already. So maybe HAL is one you want to keep on your radar. 3-month growth is 20% on the stock price. There are quite a few more, but anything that you want to add over here, Niraj?
I mean, Jupiter Wagons was interesting, the 960 crore order. I mean, it's one of the many that they get, but watch out for Jupiter Wagons. In case it reacts, you know why it is reacting. It's on the back of the order. We'll do a conversation with an expert, Deepak Jasani, in just moments from now on this GRM piece as well. There's a new kid on the block, Mukka Proteins, very high subscription numbers, maybe some of the last of these high subscription numbers that we're seeing in the near term. But watch out for Mukka Proteins, could be an interesting one in the session today. Subscribe 137 times, might have a bit of a reaction. And some interesting brokerage notes, Tamanna. You would have picked up some. The one that I thought was amongst the ones which was very interesting was this HSBC note on Phoenix Mills. Yes, they're very early on target price of 1,600. They've revised it to 3,100. So don't get confused by the uptick in target price. The current price is about 2,753. They've raised the target price to 3,130, which is a 13% upside. But they effectively saying that there is a version 3.0 now. Stabilization of new malls and office portfolio will drive high double-digit earnings growth over the next 3 years. And I must say, save for the COVID lows, this one has had a phenomenal, steady run all through the last 2, 3, 5, 7 years. It's been a wonderful stock. No reason why it cannot continue.
Only one more note is on Mahanagar Gas. Because of what we saw yesterday. Now, Motilal Oswal has maintained a buy on Mahanagar Gas at 1665. I mean, this is a stock which yesterday dropped 15% on the back of concerns that gas prices will be cut. And the reason that Motilal Oswal is saying this is they say the government has focused on volume growth rather than regulating prices. So they will focus on volume growth, saying that don't worry too much. The end of infra exclusivity only leaves 20% network capacity for new entrant. That means their dominant position continues. So they do not believe Mahanagar Gas faces a significant risk. In fact, their target price is 1665. And they look at a 4% volume CAGR over FY23 to 26. And I found that interesting, considering that you had Indraprastha Gas also announce price cuts after that. So different take?
Yep. Well, let's wait and watch how these stocks shape up. Some of the pressure or some of the discounts maybe in the price. Let's wait and watch. But oil and gas is in focus for more reasons than one today. And Deepak Jasani, Head of Retail Research at HDFC, joins us right now on the phone line for his thoughts. Deepak, thanks so much for being patient with us. Niraj here, good morning. This fall in GRMs doesn't happen overnight. It's been now happening, but this large differential between what existed, let's say in the month of November, or let's say maybe a year ago to now, what kind of impact do you think it has on some of the oil and gas names?
Yeah, so the refining margins in the Asian region have slipped to about 8-month low. Now this is mainly due to China factor. Now China, despite giving a 5% GDP projection, investors were disappointed with the lack of any major stimulus. The internal combustion car sales also continue to fall. There is sluggish industrial activity and property downturn. So all this is weighing on the petro products demand. So this has led to the refining margins shrinking in the Asian region. Now, as far as Indian companies are concerned, most of them are trying to beat or earn more than the Singapore refining margins due to their unique facilities that they have. And apart from that, they also have a large portion from marketing margins. So the marketing margins so far have been sort of compensating for the soft GRMs. As long as the petrol and diesel retail prices are not revised downwards, their marketing margins will continue to be quite healthy and may offset a little bit from the soft refining margin side.
Good morning, Deepak. Just a quick question over here. You're saying that this depends on whether petrol prices at the pump are increased or decreased. The thought is that you're not going to see too much of a movement ahead of elections, which would be par for the course, but in this case, we may not. Is it fair to say then, in that case, the impact for HPCL, BPCL, IOCL may be higher because they definitely cannot increase pump prices at this time?
Yeah, so going by the latest crude oil prices, the pump prices are meant to be revised downwards. So as long as they are able to maintain the pump prices at the current levels, their marketing margins will remain protected. So there is not much of a threat as far as the marketing margins are concerned, as long as the pump prices are not revised downwards.
Deepak, what about the other players? Let's say at Chennai Petro, MRPL, Reliance. Is there an impact on them, do you foresee, because of this differential, or not really?
Yeah, the pure refining companies will face some sort of a pressure because of the soft refining margins. So but the OMCs who are marketing plus.
So Deepak, OMCs are fine, but you see a large impact on let's say a Chennai Petro or an MRPL, or it will be contained?
See, now things are not so easy as far as these refining companies are concerned, because there is also an element of inventory profits, losses and gains. So we'll have to wait out for the end of quarter prices of crude oil. So that will have a big impact on the overall profitability. But net, based on this development, there is a reason for some fall in their profitability.
Fair call. Okay. Deepak Jasani, much appreciate you taking the time out. Thanks for being with us this morning. So that's the update on this big news flow around GRMs coming off and what the probable impact could be. Watch out for all of these names. So difficult to comprehend what the exact impact could be, but at least you got a gist. OMCs, maybe the least impacted, though, on a nominal basis, they get impacted by about 14-15% for every $1 drop. Maybe the pure refining companies, the MRPLs, Chennai Petros, Reliance, liable to get more impacted. Watch out if there's a reaction. You should know why that is happening. But you should also try and know why a reaction is happening in cement companies, Alex, isn't it? It's been a rough ride thus far, YTD.
Absolutely. In fact, let's pull up some of the prices of the stocks while Niraj makes his way to the podium for the editor's cut. We're talking about cement companies because some of the, actually, I would say 3/4 of the cement company stocks have seen quite a bit of a crack in 2024 so far, and that should be on your screen. Let's pull up that graphic right now. The likes of Ramco, the likes of India Cement, Shree Cement, even Ultratech Cement losing about 7.7%. Of course, a lot of that action, I was looking at yesterday's price action, Niraj, and quite a few of these have lost ground yesterday as well. But I was looking at a few reports just to hopefully set you up for this conversation.
Yeah, sorry, just one correction there. So, viewers, what you're seeing is that the top 4 stocks are actually down in trade. Ambuja and Star Cement are the only ones which have gained in trade. So most of the cement stocks actually have a negative performance YTD.
Yes, and Ultratech Cement is down 7.7% as well. That graphic was incorrect. But while trying to set this up for you, I was looking at the projection for Q4, and while volumes are not expected to dip, there's expected to be an increase in volumes. Pricing seems to be the big concern, Niraj.
Yeah, so, you know, we're borrowing this partly from the dealer checks that both Investec and Nomura have done, right? And we watch out for these dealer checks happening every month. So Pan-India prices for the month of February, Alex, declined by about 9 rupees per bag month on month versus Q3 FY24. Now, 9 is a fairly large number for what usually is a busy construction season or the start of the busy construction season, because in the head up to the monsoon, you expect these activities to be high, post-festive season activities to be high, people have come back, etc. The pan-India prices, in fact, have seen continuous declines. From October 2023, the spot prices are now 8% lower from that peak, October 23 peak. So that is an issue that we have, that cement prices, no matter what companies may be trying to do, are not seeing an uptick.
Yes.
And you rightly said that if one looks at what is in store for the month of March, right, as per both the notes, as per the Nomura note, prices in March have moderated further by 6 rupees per bag, and Investec says that mills have not indicated any kind of price hikes for the month of March. So price hikes are out of the window. Now, the question is, do you see volume growth being so strong enough that it compensates for prices being lower? Because revenues would be a factor of volumes into prices. And when we are not seeing pricing do well, if volumes are also not growing at the pace that one would like them to, is there a case for cement to be constructive? Never mind the fact that we believe that it is a great sector for the long run. In the short term, are there issues at hand?
So the reports that I was reading, there was one by IDBI Capital that was projecting this post the Q3 results and looking into Q4. 8 to 10% was the volume growth that was projected for the industry. And one would assume that, and this is, of course, you know, accounting for everybody, but you're talking about a significant increase year on year in the fourth quarter, but the EBITDA is likely to shrink based on the prices.
Yeah.
So I guess to a certain extent there could be impact on the bottom line in the short term, but then the top line growth is there.
You know, the confusing thing, Alex, is that for some companies which have gotten efficiencies back into play, like a case in point being the Ambuja ACC duo, and standard disclosure, they are owned by the Adani Group, and the Adani Group owns NDTV, but that doesn't matter really. ACC and Ambuja have guided to EBITDA per ton inching up. Now, that could be the case because those companies are now feeding on the efficiencies that come in from all the related infrastructure efficiencies that the group brings to the table. So that may be an isolated case. But for most companies who are talking about, let's see what happens in quarter 4, and a significant EBITDA uptick or EBITDA per ton uptick seems so difficult to clock in at a point of time when you're not seeing prices go up. Because remember, Q3, commodity prices or input costs softened quite materially, right? Yes. So you could see some of those benefits come in selectively in metal companies, in cement companies, etc. Now they haven't gone further down from those levels. Yes. If anything, select commodities have inched up just ever so marginally. But if cement prices are coming down, then how is it that you see the EBITDA uptick? So that might be a question mark. quarter on quarter. I don't know about the YOY numbers, excuse me for that, but quarter on quarter, it might be difficult to predict that for sure.
Last question from my end, and perhaps I'm sure a lot of the viewers are also wondering this based on the price movement that we showcased at the start. Those last two companies that have moved up quite significantly, I believe one was up as much as 16, Star, and Star is up 16%.
Yeah, again, the East India activity, very, very pronounced there. We know the kind of infrastructure development happening out there, so that could be one factor out there for Star Cement. For Ambuja, like I said, efficiencies coming into play. It wasn't trading at the kind of numbers that, let's say, for example, Shree Cement on EBITDA per ton was all through this day in wholesale. So that is one. But while you didn't ask that, Alex, just one quick word before we wrap up. What's in store in March? That's the other thing, right? So dealers had indicated demand was muted in Feb 24. Don't foresee too much of an uptick in March. That's part one. Labor shortages could be a big thing in March. Ramzan, Mahashivratri, Holi. All impact worker availability, maybe production, maybe dispatches, maybe a combination of both. So that's the second piece. And slowing activity this year in particular because of the Achar Sanhita or the election code of conduct. So if that comes into play and the government spend and activity and infrastructure is a bit muted, then what you would have on a YY basis, you might have an issue out there too.
Absolutely. All right. On that note, that brings us to the end of this particular edition of Editor's Cut. Let us know what you think and whether or not this gave you a little bit of clarity on your investments into the cement space. We'll be back in just a bit with setting you up for the rest of, or rather setting up for the start of trade. Do stay tuned.
Welcome back. You're watching India Market Open. A quick look at the implied open before we go on to Agam to set the day for you on the F&O side of things. Improvement, I would say, from what we're seeing at least the last couple of days this week. So muted start again, but in the green. A positive start, maybe some short covering, maybe some recovery also expected. Agam, ahead of a long weekend and on Nifty expiry day.
Yes, so yesterday was a very interesting day of trade. What really happened was that very earlier on, we saw the sharp up move in the bank Nifty. And the expectation was that it will eventually come off because the Nifty was trending nearly in the red throughout the session. But it just so happens that we saw the reverse coming through. And while following the bank Nifty, we saw the Nifty move up, which means there was strength in a lot of the other pockets as well towards the last 2 hours of the trading session yesterday. And that has eventually led to the Nifty advancing and closing at a new life high. And this time around, after 3 straight sessions of no change in open interest, we are now starting to see traction there. So a 9% increase in OI there as well. As far as the bank Nifty goes, well, we do know that it was essentially the private sector banks which continue to give strength through the course of the day to the bank Nifty. It's not at a life high, but it is inching towards that mark. And we did see a little bit of unwinding coming through as well. So a lot of your old shorts perhaps were covered through. Well, in terms of the options market, today is the weekly options expiry. It's a very broad range. This is, of course, just the change in open interest. But in terms of the range, as I was mentioning, right at the lower end, we're seeing maximum open interest in the 22,000 put. You know, it's at the moment, it does seem very unlikely that we're going to go all the way till there. I reckon at the moment, we're going to see a little bit more continued resistance, or pardon me, support around 22,200, 22,300. And on the higher end, sure, a lot of people have written the 23,000 call, but they've all taken advantage of the sharp move on the Nifty in the last 1 hour of trade. But these options are anyways very, very contracted. I reckon in the near term we will, and today specifically, we will likely see some amount of resistance around 22,700, 22,800 thereabouts. If we do see substantial strength on the Nifty 50, that said, 22,500 continues to be one level that is going to be a hard one to take out, but you never know. If we do see a very strong opening, things just might change. Now, this is as far as your option markets are concerned. In terms of stocks, we saw a lot of shorts in MGL, IGL, and we're likely to see a little bit more weakness in IGL as well, considering they have gone ahead and taken cues from MGL and also cut pricing there. Some other Motherson, of course, on the back of block deals, Ramco Cement and L&T Finance. In terms of stocks which are unwinding, we largely saw short covering only in Muthoot Finance. Save for that, Tata Motors, BHEL, Interglobe Aviation, BPCL looking at longs unwinding coming through. But the real question is that how do you address the Nifty today on a weekly options expiry day, even as we move into a long weekend because tomorrow is a trading holiday? Well, let's get in Shilpa Rout of Prabhudas Lilladher, who's going to be joining us right now. Shilpa, good morning and thank you so much for joining in. Firstly, your view on the benchmarks, the Nifty and the bank Nifty, how would you trade them?
Good morning, Agam, and thank you for having me on the show. Talking about the indices, we are seeing Nifty soaring, to new all-time highs, session after session. And yesterday was just a breather, like we always talk about, a good run-up and, a couple of sessions, consolidation, a small breather is always, benefiting, for this health of the index. So you will see, again, Nifty hitting towards 22,000. This is what I believe. Even I believe, when we talked about the rollovers at the end, at the start of the series, this is how we talked about that Nifty is well placed for 22,800 to 23,000 zones. So this is the view stays intact. Nothing is changing. The FI's net long still at 40%. So they have not, dipped much also in this breather. So I believe the trend is still positive. And once they go longs above 45%, I believe, the upside scope for them to, extend their net longs will be around 60 to 65%. So in that regards, 22,800 to 23,000 levels for Nifty will definitely come in. Talking about Bank Nifty is better placed and more strong on databases than Nifty. Bank Nifty is definitely heading towards that 50,000 mark that we have been talking about.
All right, potential of the Bank Nifty to move towards 50,000. That also means that, of course, it'll take out a life high. But Shilpa, in terms of stocks and ideas there, what are you tracking?
I have two buys. The first one would be a buy in BEL. BEL trading at around 210 zones. It has given that breakout above 200 and it is holding quite well. Even if you look at the option chain, the 210 put writers are very, very active, and that is where the close has been happening for the past 3 sessions. So I believe now it is time for the stock again to show a breakout and move towards 230 to 235 zones. So there's a way to play this. I believe 215 call. It is trading at around 6.5 rupees, and you can sell 230 call, which is around 4.5 rupees. Sorry, 2.5 rupees. So the net outflow for the trade would be around 4 rupees, and the upside potential of around 11 rupees from here. So the maximum loss that one can incur here is around 24,000 rupees, but the upside potential of profits zooms up towards 65,000. So the very well risk reward favorable trade here for a bull spread in BEL. The other one would be a buy in Axis Bank. Axis Bank also is holding very well with Bank Nifty showing so much of strength. I believe Axis Bank is definitely heading towards 1180 to 1200 zones. So as long as it is holding 1090, I believe the stock is very well placed for that upside rally.
Okay, so there you have it. Two positive calls. One is on BEL and the other one is on Axis Bank. Of course, BEL, remember that we have another broking note, UBS, and they have also revised their price target there, about 257 rupees per share, which on a fundamental basis in the long term also involves about a near 20% upside. But on that note, Shilpa, I'm going to take a moment to thank you for joining us and taking us through your views on the markets as well as giving us a handful of trading ideas. And with that, it's back to you, Niraj.
Okay. Thanks a lot for that, Agam. So, well, those are some ideas that you got to keep an eye out for from a trading idea. Remember, between 8:30 and 8:40 every day, Agam will talk, or Agam talks to one expert for the outlook on the markets, as well as specific option strategies that you can enter into. Please follow these strategies for a few days so that you also get a hang of the kind of conversation that Agam does with the guests that he gets, so that you have an idea of the kind of stuff that we're doing here. Just a request, because options isn't the easiest thing to execute. Now, what is also not easy is trying and figuring out what are the key stocks that one should watch out for in a given day, simply because the list usually is very large. Mahima does a fine job of picking out the 2 or 3 or 4 which might be the most relevant on any given day. Mahima, good morning.
Good morning, Niraj. So today's topics would be first one, GPT Infra, where the company has received an order of 135 crores from the Railway Ministry, and this will be concentrated to the Northern Central Railway in UP. And the contract is a JV between two companies, so 51% stake will be for GPT Infra in this. Then we have Hindustan Aeronautics. Well, the company has signed an amendment in their LCA IOC contract. Well, the contract value has doubled now. Prior to this, it was 2,700 crores, and now it has been revised to around 5,000 crores. Talking about the recent order wins, they also had a recent order win of approximately 5,200 crores for supply of RD-33 aero engines. And if we talk about the stock performance, well, the stock has been a multi-bagger for 2023, and in the past 1 month it's been up 10%, and 6 months it's been up around 60%. Now talking about moving on, third stock that is on my radar today is Asian Paints, where the company has entered into a agreement with Gujarat Chemical Ports, and this is for setting up an ethanol storage and handling facility in Dahej, Gujarat. The cost of this facility is approximately around 2,100 crores. So these are the 3 key stocks to watch out and trade today.
Okay. So watch out for some of these. Now, remember, a 2,000 crore manufacturing facility announcement by Asian Paints, I think came in 2-3 days back as well. So keep in mind, because of the aggressive entry of Grasim, you'll probably keep on hearing sporadic announcements by everybody else in the ecosystem as well. But I must say, for all the scare around Asian Paints, when the event happened and the stock corrected for 2-3 days, just keep in mind the stock is corrected so much for the last couple of months that it's now stabilizing at around this 2,800 odd levels. So that's to be kept in mind. But without much ado, let me get in one more special woman. Soni Patnaik, AVP JM Financial Services, joins us right now on the show with her thoughts on how do the markets look and what could the way ahead be. Soni, great having you. In advance to you and your team at JM, a happy Women's Day. You guys are doing an amazing work. I would love to know how you guys are thinking or how you are thinking about what markets could do in the session today ahead of the long weekend.
Good morning, Niraj. Thank you so much for having me on the show, and thank you for the special wish. I think on just that note, I think every day should be Women's Day. And so just talking about the markets, so Nifty has given a good breakout yesterday. It was consolidating. It was struggling to break out above 22,400, 450. That range, it has broken out yesterday with the support from Bank Nifty and IT as well. So today being the weekly expiry, the weekly expected expiry range for today is somewhere between 22,450 to 22,600, 650. There's a significant shift of open interest on the put side. The highest open interest has come up to be 22,300. So in short term, 22,300, 22,200 holds as a very crucial, important support band. As long as that support band is holding, you can see 22,800, even 23,000 can be on the cards. Similar for Bank Nifty. Bank Nifty is looking quite strong. It has, given a breakout above 48,000 yesterday. It broke, although the closing was below it. But Bank Nifty is, definitely poised to take out its previous all-time highs around 48,600, and any move above that, you can see 49,500 plus levels as well, which can be on cards. Bank Nifty has multiple support. You can see, 47,500, 47,000, very strong support. So I think Bank Nifty structure is slightly better than Nifty at the moment, and most likely Bank Nifty can lead the next leg of rally.
Soni, very good morning. And I also want to welcome Amisha, Vora. You're right. Both of you all are right. Every day should be Women's Day, but we are making a special effort to focus all the talent there is, out there, especially in the markets community, which sometimes goes under the radar. So hence, great to have both of you on this show today. Amisha, let me start with your take on, the gas pack. We have a clutch of notes today, and in fact, Motilal Oswal is quite positive on it. City gas companies, what kind of a play do you think there will be today? Mahanagar Gas and Indraprastha, both of them took a massive knock yesterday.
When you open up a sector which is, their absolute kind of a monopoly, definitely there is going to be an impact. I would say that because they are very well established, it's going to take the competition a time. And finally, it is going to be good for the consumers. But in the process, these stocks can take little time who are losing their monopoly. But important part is that even stocks like Gujarat Gas, which is not into city distribution, but more into commercial distribution, there the competitive fuel prices are coming down, going up, and gas is becoming competitive again. So I think these stocks will have a better future because of better unit consumed by the commercial units. So there will be a transition within the gas pack, which is what we will see going forward.
Got it. Amisha, Niraj here. Good morning.
Hi, Niraj.
We're seeing you after a while. In fact, probably for the first time on NDTV Profit. Is it my imagination or are you looking younger?
Thank you.
Amisha, the markets
there is no better compliment on Women's Day than this.
no one better than to know how to give compliments than Niraj.
No, but we are seeing Amisha for the first time on the channel.
Yes,
so I just,
absolutely.
I'm seeing her on TV after such a long time. So that's the key
true.
thing. Amisha,
that's true.
Just the broad sense, we got this sense from Soni as well about how does the market mood look. I'm just trying to understand the last few days. The texture seems to have changed in that small caps and mid caps are taking it on the chin, while the Nifty maybe, even if the Nifty is stable,
holding back.
Yeah, would you reckon that to be the case going ahead, that index might hold out, but the small caps might be under further pressure?
Yes, that looks to be a trend, which is where the mid caps, small cap will give in or consolidate. And see, most of us, we knew that mid caps, small caps did exceedingly well. I wouldn't say they were in absolute froth space, but quite a few pockets were showing little excesses. And we have seen in the past many cycles that when this upcycle is pricked, then there is a little cascading impact which one sees. And probably we are seeing in last 4 or 5 days or a week, that kind of impact being setting into the small cap and mid cap. So for some time, we think that the weight within the portfolio of large cap and Nifty could be higher because they will hold steadier in the portfolio as compared to large cap, as compared to mid cap and small cap.
Got it. Okay. Amisha, the other aspect is the way the market is discounting bad news. More than 40-45% drop in IFL Finance in 2 days, and that was the extent of the impact believed. Gas companies, 15% taken in 1 day, that was the extent of the impact to be believed. There was a thing about this wind energy companies and how they have gotten derated after having such a rosy picture and outlook for the next decade. But 4 days on a trot, a lower circuit, derated. Is the market in the mood for taking out all bad news with venom, with a strong stick in a session itself?
So it's more something like this, that they saw what happened from the IFL-JM perspective. I'm saying that they saw what happened in Paytm and the extent of damage that it could do. So that's why I think the fear factor was really too high in the rest of the two actions which happened in by RBI. And if they stop, for example, or even if it will be 1 over gold finance, but that is a hard line of the business for IFL. So I would say that actually has an impact on their business. But coming back to even gas companies, an overall trend, when you get to pay the M2M or margins, you become very jittery. And that is the time when you decide, okay, there's a bad news. First, let's get rid of this. And that is a kind of a psychology also which is playing out, where bad news is truly pronounced because the rest of the markets are showing a kind of a corrective mode, and there are payments that people might have to do.
Absolutely. Amisha, once again, so fantastic to have you here on Women's Day. And the fact is that there is so much talent out there. We need to showcase it as channels, as platforms, and we're hoping to do that today. But coming back to what is happening in the markets right now and the kind of nervousness we are seeing, what in your view is the play? A lot of people are sitting today, perhaps watching this, looking at their portfolios and saying, yes, I have bet on the India story. I know that this is the fastest growing economy in the world, but right now my portfolio is not looking too great. They've been hammered on, the small and mid-cap stocks. Is this the time to rejig, look at your larger players, and if so, which spaces are looking the best to you?
See, I would say that 50-55% plus allocation should go back to large caps, whether it is only Nifty or little outside Nifty is okay. And within that space, I would continue to say that private banks who are showing very healthy business trend, but have not quite equally participated in last 12 months, should find a good place. Of course, ICICI Bank continues to be one of the top picks, but rest one can choose within the private sector pack. And to some extent, you say within BFSI, HDFC life insurance. So insurance pack also can come in because they went through a full set of pain, which was there because of the last year's change in IRDA policy. So the base effect is now factored in post-March quarter, which is still going to be impacted by the last year's changes, which is the last quarter. First quarter onwards, we will start seeing growth. So this stock again, sector, the life insurance, will be back in action in the new financial year. And so also I feel that in the large cap infrastructure play, Larsen continues to look really very good. Because of the overall economy where things are falling in place they will be one of the well-placed. So from large cap perspective, we continue to remain with private banks, infrastructure. It's not only Larsen but Siemens also, auto and insurance as 3-4 key areas where portfolio should be. And I would still say that selectively mid cap, small cap, after this particular round of Rout, will continue to do well. I don't think it is all over as yet, and this party will continue for much longer.
Just want to take a quick word from Soni for her picks of the day, which we usually do around this time. You spoke about levels, Soni, and obviously happy Women's Day in advance. Great to have you on the show as well. But what would be your top picks for the day?
So the first pick would be HDFC Life. We've seen a significant breakout above 600 level 2 days ago. It held well even in yesterday's choppy market. That's a very strong support. There's an option chain breakout as well above 600. So HDFC Life be the first pick. Buy at current levels with stop loss of 600 and target of 660. The second pick would be in Axis Bank. Axis Bank has seen aggressive short covering yesterday. There's a breakout on daily charts as well and an option chain breakout above 1100 level. So Axis Bank, you can buy at current levels with a stop loss of 1090 and target for 1200.
All right. Axis Bank, of course, is one of the picks Soni has, but a lot of news flow today and so many stocks to cover. Anushi is joining us with some key stocks which may see action today, as well as the bulk deals that mean that we need to keep an eye on this list for the day. Anushi?
Right, Tamanna. So two large trades that we need to be focusing on today is one is NLC India, wherein the government is selling up to 9.71 crore shares, which represents about 7% equity. So this includes about 6.9 crore of shares, about 5% stake, and an additional green shoe option of about 2% additional stake. The floor price for the same has been set at rupees 212, which is a discount of about 6% compared to yesterday's closing price. Now moving on to a major one over here is M&M, wherein promoter Prudential Management is offering up to 93 lakh crore or 93 lakh shares for sale. This showcases about 0.75% of their equity for to raise up to about 1,832 crore. The price band for the same is in the range of 1911 to 1970. So if we have to look at the upper band, that is about a 3% discount over here. Do note that Prudential Management holds about 11.6% stake as of December 23, and in the press release, M&M did specify that they are not planning on any more stake sale. So these are for today, but if you come to yesterday, there was Zomato which was in focus, wherein Antfin Singapore Holding sold about 2.04% of stake at rupees 160.4. On the other hand, we had Morgan Stanley Asia picking about 0.66% stake at a price of about 160. So Zomato did close about 2.5% lower in yesterday's trading session. So it remains in action for today. And lastly on the list is RBL Bank, wherein Matthew Sarek has bought up to 32.5 lakh shares, which showcases about 0.54% of equity. So these are some of the key highlights in the stocks that we are going to be focusing today.
Right, Anushi, one more large trade to add to that list, flashing on your screen as well. 4.9 crore shares have been, sold for Bharti Airtel, changed hands in pre-open. That's about nearly 1% of equity. So Bharti Airtel, another one to watch out for. We'll take a very short break, but we'll be right back with our pre-open session, our fantastic guests for the day, and a lot more. Stay tuned.
Back with India Market Open right here on NDTV Profit. A quick check at the implied open and you will see a small bit of an uptick. But frankly, that won't matter as much because what will matter is what happens at the broader end of the spectrum. So I think you need to look out for what's happening at the mid cap and the small cap end of the market to take notice of that. I want to take the conversation back to our guests. Amisha, I'll come to you first. Now, maybe I missed it, but I heard you refer to the instances that happen in JM, in maybe in a Paytm, maybe in IFL Finance. I just want to understand from you, when I take a look at both the instances, at least IFL Finance and JM, objectively, the price erosion that has happened in these businesses kind of makes up for the business loss more or less. Now, my question is, I'm not asking you to make a specific comment because I can understand they are in the same field as you are, but I'm just trying to understand from you, when you think of instances like these, can you look at these things objectively and say that for a long-term investor, maybe these are good times to buy? IFL Finance yesterday, for example, saw some serious delivery-based buying as well, despite the fact that it was on a lower circuit. The volumes were large.
So yes, I would say that these are more like an institutions, both of them. Even if there are certain irregularities, they will correct it and make sure that they get complied again. So it's a question of time that over a life of an organization of say 30, 40, 50 years, there could be a patch of 1 year which will slow down or which will go into correction. And particularly for Jane, this is just one of their businesses. The rest of all businesses are doing so well. So one part of the business has got compliance related issues, which they will correct, I am very sure. So I do agree with you that from a very long-term perspective, both these franchisee can be looked at.
Okay, fair call. The other thing, and actually, Soni, it might be difficult to ask about technical views on some of these or derivative views on some of these because they've been locked on a circuit only. But banks yesterday, Soni, had a good move, right? So are there banks that are a part of your buy list today? I'm talking about financials by and large, but banks in particular. I don't know if you gave a bank idea as a stock idea, but if not, is that Axis? Okay, yeah. Okay. So I stand corrected there. Axis is one good name. Anything else? HDFC Bank had some fairly interesting moves too yesterday.
Yes, definitely. I think apart from Axis, we can see ICICI and HDFC Bank looking quite good on charts and derivative data as well. So I think if you look at HDFC Bank, it has taken good support from 1400, 1420, which was acting as some consolidation resistance. It has broken past above it, and going ahead, we can see that it can test 1480 to 1500. Of course, this is more of a positional play, but if for the short term on charts, it looks like that the correction that had happened in HDFC Bank is mostly done and dusted, and this could be the reversal from here on. So it's looking quite strong to play for a short-term trading perspective, and look for targets of 1500 plus. Also, it can test, but the first target definitely would be 15.
All right, just a few seconds to go for pre-open rates to hit. We'll see a bit of volatility in the first few seconds, but a couple of more stocks that maybe should be on your radar this morning. BEL, one of them. There's a UBS note out on it. They've reiterated a buy on BEL with a target price of 257 because of their sharp new order accretions in FY24. I would watch out for a Pratap Snacks as well. They've put out a clarification on media reports of GST action against them and have said media reports are baseless, factually incorrect, etc. So that's one to watch out on. I would watch out for an MGL, a Mahanagar Gas. Let's just quickly see what Mahanagar Gas is doing in the pre-open session. There's a Nuvama note out that has reiterated a buy on MGL. So after that drubbing yesterday, you're seeing very, very mild upswing. I mean, these rates really should be taken with a pinch of salt, but the Nuvama target is at 1601. On all of these. Amisha, Vora, I want to come to you on, what you would do with your PSUs right now. And we'll talk about PSBs, public sector banks, as a separate bucket in just a bit. But this is one space which I would say after decades has now got the confidence of investors that these companies will perform, their balance sheets will be cleaned up, that profitability and shareholder rewards and shareholder value will be one of the priorities. Do you think that sentiment, that positive sentiment, is now completely priced in? Or is this a space which is one of your key sectors, say, for this year?
See, PSU as a pack, having gained the confidence of all kinds of investors, whether it is UHNI, AIFs, or even mutual funds and retail, I think that as a trend that will continue. Within that, if defense is doing very well, then defense stocks might do much better. Or if there is some other pocket, for example, some refinery stock, MRPL or something, then they will do well. But overall, they will have one thing in common, that because they are PSU and they are untouchable because of the management and capital allocation issues, I think that will be behind us. And they will also participate in line with what growth prospects that they are holding.
On the public sector banks and Soni also spoke to some extent about the banking space that she likes. So would your bet continue to be, Amisha ji, on public sector banks? If so, which would be your top picks in this space?
Public sector banks will also continue to do well, I believe, both because of the overall macro and the micro in which each of the banks are operating. SBI still has a lot of legs in terms of investor returns. So SBI within the PSU bank will continue to be one of the top picks because of the kind of valuable subsidiaries, apart from one of the very niche, technologically advanced public sector bank. Their subsidiaries like even SBI Mutual Fund, SBI Life Insurance, SBI Cards, and so on, General Insurance, are all very, very valuable. Apart from that, I would think that Canara Bank continues to look good. And beyond that, I think most of the other public sector banks are also, in terms of asset quality, coming back big time.
Amisha, somebody made this interesting point yesterday about how indices have gone through change in weightages and what could happen to specific indices, and could real estate as an index come back? It used to be 7% weightage on the index. Now it's about 1.2% even after the rally. Are you constructive on real estate stocks, part one? And part two, if so, I mean, is it pan-India players? Is it regional players? What is it that you like?
So real estate as a space, I continue to remain constructive. Of course, the trend started just after COVID, when a huge confluence of very low, index of home buying in India compared to its last 15 years helped push the demand. But after having said so, we still continue to remain bullish because this is the time when again land has and the construction ability, development ability has become critical and there is sufficient demand. So the working capital cycle has crunched within the industry. Return ratios have improved. And I think this trend has made the balance sheet of most of the players very, very healthy. Plus, some of the large players are sitting on huge land bank, because of which their ability to keep churning out this cash continues to remain for a very long time. So yes, I remain constructive on the sector. But I also feel that instead of a very large all India player, pick and choose of the right player within the geography will be a better strategy.
Prestige is having a good day. They've announced a new project as well, so a bit of news flow over there. But that stock 1% up in the pre-open session. Okay, slew of brokerage calls this morning. My colleague Harsh has a list of the ones that are the most important. Yes, Harsh?
Well, let me first start off with Phoenix Mills. HSBC maintains its buy rating, target price 3130. They believe that Phoenix has successfully executed its 3.0 strategy. 5 malls added since 2020. They're expecting 2 more to be added over the next 3 years, thereby making Phoenix the largest mall operator in India. But not just that, they believe that Phoenix in the bargain has done well to keep leverage low and to churn cash very well across their malls. Margins of roughly 13 to 14% are quite solid even for the new malls, and that is impressive for them. They're expecting a high double-digit earnings growth over the next 3 years, and they're expecting free cash flow conversion to be quite strong as well. EV to attributable EBITDA at around 25 times is what they value it for FY26. They're expecting a 16% EBITDA CAGR over FY24 to FY27, and they've given it a valuation of 3130, which is a tad bit below peers currently at least. Quickly moving on, UBS on BEL reiterates a buy. Target price 257 from the earlier 205. It's a sharp increase in target price. They believe that earlier problems were with regard to slower order book accretion. That's been a key concern, but now the new order run rate is quite strong, and that's going to be the key catalyst going forward as well. There's been a sharp new order accretion in FY24, and they're revising their top line estimates. They believe that there is an upside possibility to top line estimates. Currently, consensus has built in a 14% top line growth both for FY25 and 26. They are expecting that to be revised upwards as execution, they believe, is going to be strong. Largely on the back of just the way in which the Ministry of Defence is evolving with regard to order demand. They are expecting execution run rate, cash flows to therefore be important parameters, and they expect improvement on both of those fronts, maintaining a buy at 35 times price to earnings versus the 30 times earlier. So they've revised their PE and they've changed it, and they've revised it for March 26 estimates. 257 is the target price there.
Okay. Harsh, thanks for bringing us those notes. So watch out for BEL. Excuse me, no major reaction, at least on that stock. So bear that in mind. But the pre-open rates have settled, and as the pre-open rates have settled, we're about, what, maybe 0.2% higher for 0.14% higher for the Nifty. I was trying to look at stocks which have corrected in the session today as well. So both Suzlon and Inox continue to be lower. I must say the Network 18 and TV 18 twins for the last 5 sessions now are on a lower circuit. Network 18 is down 5% yet again. From a price of 110 or 115 when the deal got announced, this stock has been clobbered out of shape and is now at 85. So watch out for those. And watch out for cement. We were talking about how cement stocks, in editor's cut, we were talking about how cement stocks have had a bit of a pullback. So Dalmia Bharat is down 3.5%. Star Cement is down another 2.5%. So there's some bit of pressure on that cement pack as well. Soni, the YTD performance of the cement stocks has not been great at all. Do you see some downsides there? Because I was looking at the YTD performance, except for Star and Ambuja. Most others have looked wobbly.
So, Niraj, if you look at from the data perspective, there has been some selling pressure for the entire pack, in the past 2 or 3 odd days. However, this is on contrary note to how the rollovers had acted out for the cement space, from the Feb to March series. And it was actually indicating at a long rollover. So maybe this entire pack could see some continuation in the selling pressure. But however, this also remains as a buy on dips. I think there are a lot of stocks, if they can give another 5% max correction, then that could act as a good level to reinitiate longs, at least in a few quality stocks, which we can see from the data perspective. In Ambuja Cement, ACC, you can see these stocks can at least bounce back. So, there are a lot of support also. They've not tested those support. So I think Ambuja 580 is a good support, 580, 575. If it's able to hold that support, it should definitely bounce back and then head again towards 620 odd levels. I think these are some of the stocks that we can still look at on the entire pack.
All right, just a quick look at the Feb sales data that has come in from FADA. That's at the dealer level, and especially for the passenger vehicle segment. This seems to be the highest sales year on year in the month of Feb, where total auto sales have risen to 13%. Auto is going to be on the radar as well. Amisha, Vora, I wanted your take on not just auto but on Tata Motors too. with the whole demerger buzz around it. There's a Moody's, rating and a Moody's note as well. How do you look at this space, and is it safe to say that Tata Motors will be the pack leader in the PV segment at least?
So on an overall basis, yes, Tata Motors will continue to chuck along very well with the increased focus that individual demerged entity will have to pursue their own individual goals. And the stock has, from COVID, almost has been a 10-bagger. And I still feel that they will continue to do very well. Each of their segment actually is doing very, very well. And the fact that they are demerging shows that within the EV business also, and passenger vehicle business also, they're seeing so much strength that their capex requirement or cash flow requirement will be met by that individual business and will not have to lean on to commercial vehicle business, which always has been the case in past 10 to 15 years. So I do believe that from here on also the story will continue.
So the Tata Motors story will continue, but within the pack, what would be your big bet, Amisha, on the two-wheeler and the four-wheeler space?
Hero Motor is one of the stocks that we've been recommending. And overall, when you see the four-wheeler pack along with four-wheeler pack, we believe from the listed space, Tata Motors continues to be one of our top pick currently.
Okay, so Tata Motors is your top pick, and of course Hero Motor in the two-wheeler space. Soni, I'm going to ask you, your take on the auto pack and what are you liking over here?
So from the auto space, the first pick would be Maruti. We've seen a significant, move in Maruti in the last series as well as in this series, and it's holding above a good breakout level above 11,200. So as long as on short-term perspective, 11,200 is getting defended, it can definitely head towards 11,800 to 12,000. Its stock is looking quite good. A small decline would be the right amount or the right level to just enter. Somewhere around 11,400 should do the trick, and keep your stop losses at 11,200 for a target of 11,800 to 12,000. So this would be the first pick, and the second pick would be in TVS Motor. We've seen TVS Motor in a continuous uptrend, and any small correction, any small decline, it always turns into a good buying opportunity. It has given a very good breakout above 2,200 level. So any small decline that one can see in TVS Motor towards 20,240, 20,250 should be a good level to reinitiate the longs. Keep your stop losses at 2,200. The stock can test 2,400 in coming days.
Okay, well, the market's about to start. Take a moment to thank both of you, Amisha, Soni. Thank you so much for joining me today, and have a fabulous weekend. And thanks for making our morning special with your presence. Well, it's the penultimate day to Women's Day. Let's see if the market salutes that. Well, ideally it should. If I was Mr. Market, I would certainly do that. Let's see if Mr. Market actually does that or not. 20 seconds left for the markets to kickstart. Watch out for the oil and gas majors. We haven't seen a substantial move as a result of those GRMs coming off. Will that happen? I think let's wait and watch. But we haven't seen a substantial move in the pre-open session. What we've seen a move down is on these wind energy companies, Inox, Suzlon, etc. So they continue to sulk. The media companies continue to sulk. Maybe banks will give a bit of a relief to the large caps. For now, starting off about 31 points in the green for the Nifty 50. Bring up the Bank Nifty and see if the banks are performing well. Well, no, today is a bit of a flat day, but we are no longer at 46,500 support levels. We are at 48,000. So it's a good going, really, for the banks in the last few days. I wonder if Nifty IT, today there's a Morgan Stanley which is contrarian and contrarian to the others and is positive. Mid caps are constructive, Nifty IT is flattish, and small caps, the ones which have been taking it on the chin. Voila, today there's a bit of an uptick, so not a bad start for the small cap space. Let's get the heat map up on the screen. This is the most pleasing number. Let's see if this lasts. More green than red. Let's talk about the winners first. JSW Steel about 1.7% higher, ONGC 1.18. There is Hindalco. So metals are making a bit of a comeback. 2 days or 3 days on a trot. They've been beaten down today, trying to make a bit of a comeback. As is Power Grid, by the way, up. Tata Motors, Amisha Vora's top recommendation as an investment idea. up about 0.89%. You would ask what happens to a stock after it's gone up so much while Tata Motors continues to rise. What else? Adani Enterprises yesterday was down. Today about 0.7% higher for that one. There's strength in Bajaj Auto, Sun Pharma. So those are a few names that are looking good. What is not looking good? M&M, but this is a technical thing, a deal-backed thing. Doesn't alter the fundamentals in any fashion whatsoever. Wonder if this will be short-lived. Some bit of mixed bag performance in IT. So Infi and TCS continue to grind lower, and Reliance is looking slightly soft. So from amongst the large caps, and I don't see any of the others like BPCL on the list of losers. So the GRM downtick, Tamanna, hasn't had a dramatic impact from the looks of it, but for the fact that Reliance is down 0.5%. Oh, cement is looking wobbly.
Yeah, cement as well. But also I'm looking at the fact that your indices are at record highs or have hit record highs on opening and have stayed pretty much there. So that is good going. You're not going to have maybe huge moves in a market like this. And we've seen that consistently. It continues today as well. Specific stocks that we should watch out for: BEL. We spoke about that. A UBS note on BEL reiterated buy with a target price of 257. So let's take a look at how BEL is performing this morning. About a percent and a half up in the green. Not too bad at all. Prestige Estate Projects was the other one on our radar. They've launched a luxury residential project in Whitefield, Bangalore. So very tony neighborhood of Bangalore, 2% up. Pratap Snacks had a clarification out on media reports about GST action. So that's talk about 1% down, but seems to have contained the possible fall. Mahanagar Gas is the other one. A Nuvama note out on Mahanagar Gas. And remember, it had a huge hit yesterday. It's still down after the pre-open rates showed it with a bit of a positive upside, but not down massively, about 0.5% at this point. Phoenix Mills also on the back of a brokerage note, about 2.5% up. And Sirma is the other one, which is, seeming to have a good day because of a brokerage note. So these are, some of the pops over there. But it's fair to say that this is not a market going over the top. Careful plays over here, and we've seen that range-bound trade continuing. But the trend, the trajectory is upwards.
Yes, it is. And I'll tell you for what the trajectory is upwards. Before we get to Amira Shah, she's our special guest joining in. IIFL Finance is up 8%. So after 2 days of being down in the dumps, this one is up 7.5% to 8%. Very strong move there. By the way, Inox Wind Energy and Inox Wind, I want to pull them and see if they are also in the green by any chance. It's not on a lower circuit, which is maybe a respite for Inox Wind. Inox Wind Energy incidentally is in the green. Suzlon should come up on your screen. Is that in the green? So that's the other one. JM Financial, the Suzlon is up 4.5% by the way. JM Financial should come up on your screen. It was down about 10% or 11% yesterday, up 2.5% today. So good move there for JM Financial as well. So those are a few names which have been beaten down in the last few days are coming up. And lastly, Tamanna marked Awas Financiers, very interesting move there, up 2.5% today, was up yesterday after all that's happened in the city note yesterday. Was up yesterday, is now adding on to the gains, 3.5% higher for this one. So do keep a keen eye out for this stock as well. And then we will talk about diagnostics because that's a space that is very interesting, and we got a very interesting management joining us.
The great thing about celebrating Women's Day is that we're getting the opportunity to speak to all of these great leaders and superb leaders, because of this. So Amira Shah, thank you so much for joining us. She's Managing Director and Promoter of Metropolis Healthcare. And of course, since the occasion to mark is Women's Day, let me start with just setting that context and how crucial and important it is. Of course, you have been completely a role model for many women entrepreneurs. So let's start with a message from you on that, Amira.
So kind of you guys, and of course, happy Women's Day to all of you who are watching today. I think earlier Niraj mentioned something about Mr. Market. I want to give a different opinion. I think it's Mrs. Market.
Absolutely.
I take on board. Amira, excuse me, it's just the commonly used acronym, but I take on board. I rename it to Mrs. Market from today, from my end at least.
But I'll tell you why. Our finance minister is a woman. Our SEBI chairperson is a woman. There are news articles talking about how more women independent directors on boards. increase the corporate governance of companies and actually land up creating far more shareholder value over long term. We'll see women-driven companies who are actually performing exceedingly well. So I think it is the time, for us to change this common popular acronym to maybe making it more balanced and maybe more female-oriented also. But look, I think it's a good time, I think, for women, in India. Great opportunity to keep investing in the financial markets. This is a completely democratic space. Nobody looks at your color, your skin, your gender, your sex. It's just who you are and what capabilities you bring to the table. And financial services allows you to really be able to create your own wealth, your own financial empowerment by using your skills and the amount of knowledge available, through you guys as well as others in public platforms to learn skill sets on investments, I think are fantastic. So I think this is an area that women, even if they're sitting at home and not able to go to jobs for logistical reasons, I think this is an area that each woman must pick up and really build her own financial wealth and portfolio and empowerment.
Absolutely. But, the important thing is that at the end of the day, women want the same opportunity and want to be treated the same as everyone else. So now that we've had that comment from you, we're going to come back to business and how your business is running, Amisha. And completely, Mrs. Market has also treated the stock well. Now, I want to understand overall what the competition is looking like. Metropolis has had, quite a dominant position, at least in the western region, Mumbai, etc. You have more and more online players coming in. Can you tell us your sense of how you're navigating the landscape as competition heats up?
I think, I think in India, you're always going to have new players coming in. There's no dearth of entrepreneurship. There is no dearth of money. There's no dearth of, interest to invest. So I think that's always going to be a case. But I think there are certain industries which are non-commoditized, like healthcare, where actually your expertise, your real ability, your precision, specifically in diagnostics, all of this plays a really important role in your becoming a leader. And we have not become leaders in our industry by fluke or by simple distribution and marketing, or just product releases. That's more FMCG. In our business, we've become leaders because we are really experts at what we do. And we're able to hone that culture, that DNA, that purpose every day and demonstrate it to doctors all across the country, as well as to consumers and patients every day. When they come to us and trust us, when they're at their weakest and most anxious with cancers and strokes, you know that somewhere there is that trust which cannot be easily built by somebody else, or it cannot be easily broken with Metropolis either. So I think our right to win stays very strong. I'm very comfortable with the structural growth story for Metropolis in the next few years, very comfortable with where we'll be able to perform and create shareholder value as well.
Just going back to, the last set of numbers that we have, Ms. Shah, you had a bit of hit on the EBITDA margins. Of course, there were a couple of reasons for it, but there was a bit of pressure there. You have a network expansion strategy. We'd like to know more about that. You had a one-time impact because of your doubtful debt provisions. Can you give us a sense of whether those headwinds are now behind you?
I think certainly. I think, 2-3 things which are going to be drivers for margins. See, we have to remember in the year 23-24, in the first 9 months of the year, we didn't take any price increase, unlike some of our peers, and our growth was actually solidly volume driven. We had almost a 9.5% volume growth in the first 9 months, which really outpaced the market, the industry quite significantly. And plus we had, a revenue per patient growth and plus other things. So overall, the revenue has been quite significant in the double digits, for the first 9 months of the year. And we also announced that we would be doing a price incremental revision, inflationary revision at Jan 1st, which has already happened. And therefore, we will see the margin uptick happen from Q4 of this year. Naturally because obviously of prices, but also as we continue to build volume and drive economies of scale and efficiencies in the process. So, like I said, going into next year, into FY25, I think we feel quite comfortable and confident that we've cracked the volume growth code by working really hard through multiple different channels. And now by also using the price lever and also using the product mix lever, together that should really bring us to an overall good growth.
Just one question. There is now a set of the large diagnostic players, you and a few others, then the second rung, and then the unorganized one. What do you think the growth trajectory is like for the next, say, let's 3 years? I mean, everybody's talking about 2047, that's too far out. Let's say the next 3 years or 5 years. Do you reckon that the leaders of the pack will have a higher than the industry growth rate while maintaining operational metrics?
No, it's difficult to generalize, Niraj, for everybody.
Okay.
I can certainly speak for ourselves, and I can certainly say that for us at Metropolis, we will certainly, go faster than the industry. Margins will grow faster than the industry, and we'll continue to outpace. But each company that you're talking about is in a different phase, of growth. Some have already captured their growth in the past, and future growth looks a little bit harder. Some where execution is still not in full swing. So everybody has their own sort of challenges. But I think the general noise, which is that, the industry is infiltrated with too many people and now there's too much competition, which is causing the challenges, is actually only partly true. Yes, there is competition, but there's always been competition in our industry. It's never not been there. Really, it is an internal fight on how good your execution excellence is able to drive your margin and revenue up growth. And that's where I can only speak for ourselves, and I feel confident about it.
That's a fair point. Just last word from you, Amisha, on what is your strategy on expansion? You talked about cracking the volume growth code, but I just want to understand how much of focus is going to be on increasing your footprint and presence.
So definitely, if you look at it in 2023-24 as well, we started the year by being present in 350 or 375 towns and cities all across the country. And we're going to end the year by being present close to 600 towns and cities all across the country, right? So distribution in terms of access, providing access to people who can access our specialized tests and our normal tests, and providing that entire 4,000 varieties of test menu to every small part of India is definitely going to be a critical part of the strategy. So geographical expansion will certainly be a key part, but along with that, product mix, as we keep moving people to better, more advanced, specialized tests as well, when it's required by them from their healthcare perspective. I think both of these will play an important role in our strategy. And we are going deeper in the cities in which we are already leaders in. And we are going definitely wider in the markets where we are challengers and where we think that we still don't have a significant presence. And we're making investments in those markets to really be able to differentiate ourselves and gain market share.
Thank you so much, Amisha, for speaking with us and joining us as we celebrate Women's Day a day in advance. But we want to highlight the contribution and the presence of leaders across the spectrum that are women as well. So Amira Shah there speaking about the growth prospects of Metropolis. Just want to mark what's happening in the markets before we take a very short break, and let's look at what is happening with all the Tata Group stocks. Now remember, the buzz about a listing of Tata Sons possibly by September this year has been growing leaps and bounds. So you should look at what's happening with the Tata Chemical, the Tata Steel, all of them having an interesting day. Tata Chem up about 7%. Right now, even as we speak. So you're seeing quite a bit of action in that space. Tata Investments as well. Let's pull up Tata Investments very quickly and see what's happening there. That has been an upper socket kind of a story for the last 3 sessions. And yeah, once again, Tata Investments on that upper socket. I don't know if it's the semiconductor play or, the whole listing bit of Tata Sons is boosting all of these stocks, but definitely want to keep on your radar. Very short break, but we're coming back with more exclusive conversations. Stay tuned. Welcome back. You're watching India Market Open, and on our special coverage today, we're celebrating woman power, women entrepreneurs as well on the occasion of Women's Day. Avanitka Saraogi joins us now. She's ED, Executive Director at Balrampur, Chini. That's one of the largest integrated sugar companies in India. Avanitka, thank you so much for speaking with us here on NDTV Profit. Wish you and, of course, all our viewers happy Women's Day in advance. Great to have you here. Let's start with a comment, from you and a message to women entrepreneurs before we move to the business end of things.
Good morning. Thank you so much for having me on the show. A message to all the women out there, not just the entrepreneurs, but the women who just think that they can be something and someone more than whatever is prescribed to be. I would say go for it. This is the time and this is where it'll be respected. And I think all the corporates, including ours, is welcoming women with open arms. So this is, the right time to try and strive and reach all your dreams.
I must ask you, I know you are generationally from the family that runs the company, but it is a space where you don't see too many women. At least in the sugar industry, I think you're more of an exception. Do you think that it has been a tough task to sort of break that barrier and to ensure that stakeholders in your industry know that when you're speaking, you're coming from authority? Were there any challenges you faced in this journey?
That's a great question, I must say, because it's the same one, I was asking myself before I joined that will I be taken seriously? Will I be respected? Will they really, understand that I'm not just a woman, but I'm talking from a place of know-how or power or whatever. Will they accept the authority? But I tell you that I think that I am one of the lucky ones because it was my grandmother who ran the business before my dad did and not my grandfather. So they were already used to seeing, Madam G, if you may. In fact, our sugar mills were earlier called Madam Wali sugar mills in the, in the areas where they are in UP, because unka payment acha hai. Madam Wali sugar mill ko ganna denge because unka payment acha hai. So these kind of legacies that I have going for me, and everybody sees my grandmother in me. So that's a very, very big, I would say, tailwind for me. So I actually never faced any issues.
That's such a beautiful story, Avanitka ji, and thank you. Hats off and ode, of course, to your grandmother as well. Let me come to a bit about the business, and the big headwind has been the FRM that the government seems to have set. That was a downtick for all sugar companies, including yours own, as far as the stocks are concerned. How much of an issue do you see this working out to? The initial feedback has been that don't worry, you will have prices going up as well. Your MSP is going up as well, though it will happen after elections. Are you betting on that?
So I'll explain a little bit of the sugar scenario so that you may understand at least Balrampur or any UP mill position on this. The FRP has been increased by 40 rupees for the season, for next season. Firstly, it does not affect the season which is currently running. And secondly, UP runs on SAP. For example, we are already more expensive than the prescribed FRP of next year. So it affects us absolutely zero, which is what people need to understand, that UP is completely unaffected by this uptick in the price because our cane price was already higher to begin with. So this will affect, Maharashtra, Karnataka millers, but I don't think anyone is really complaining because of the, the reason that you also said. And plus the ethanol program will be back on track by next year. Hopefully all things as per what they are going now, ethanol program should be back on track and we should be absolutely fine. There's absolutely no need to panic when it comes to the sugar industry. The government has, in 10 years, maybe they have tried to regulate this industry 5%. What we have seen historically versus this is absolutely nothing. And after the elections, I'm 100% confident that the government will completely bring back on track the ethanol program, as well as the sugar prices will not be an issue.
Let me come to the ethanol portion of it. Can you use sugarcane for blending? Can you not use sugarcane for blending? Give us an idea of what your outlook is on this, because there's so many factors coming in terms of sugar pricing internationally as well, export caps as well. How are you viewing this issue?
So everything is related. It goes back to the crop. Right? If you have enough production in the country, the government is very clear that firstly, the consumption of the country must be met. Secondly, their ethanol targets must be met. And only then will they talk of export. And I think this is the right approach. This is the approach that as a company, even we would want them to take. We are committed completely to the, to the growth of our nation versus just, making some profits or money on the side. So even though sugar is trading at like 46 rupees ex mil for export, we would rather still have the ability to make ethanol rather than export sugar at this moment, because the government is very, very balanced when they come to that approach. So let's come back to the point. The reason that all of this regulation came in was because of the El Nino effect, which they thought would last for 2 years. Now already the El Nino effect is weakening. As you know, it's kind of raining all across the north of the country, a little bit also maybe in Maharashtra, Karnataka side, which in El Nino it does not happen. So El Nino is already weakening. La Nina is supposed to set in June, July at the latest. If this is happening, which is quite certain, I would say, in this case, the crop production will again be up and everything will be back on track. We will have enough sugar for domestic consumption. We will have enough sugarcane for ethanol blending, and we might even still have something left over to export. And if you see 2 years down the line, we will definitely have enough sugarcane for all three.
Avanitka, good morning, Niraj, and a happy Women's Day to you and everybody all female members in the Balrampur family. Just one question. I was intrigued by your response to the changes in the regulation. So I understand that it's for the next season, not for the current season, but that regulation still stays, right, until the government changes it. So the earning impact for FY25 would still be there, because the second half of FY25, which will be the sugar season for you, will see the impact unless the regulation gets changed, right?
So I think I'll make myself more clear. UP millers are unaffected by this rise in FRP.
FRP because, notwithstanding, the diversion of ethanol, sugarcane, etc., that one. I understand you are on SAP, so that will not bother you.
Yeah, it won't. Yeah. Sorry, so can you say that again? You're asking me about the ethanol blending program?
Yes.
Okay. So you're talking about the FY25, the balance sheet?
Yeah, so what I'm saying is, if you're saying that these moves will have an impact in the new sugar season, hypothetically, in which case it still impacts the second half of FY25, which will be April to March from an accounting year perspective, right? So there will be an impact on FY25 earnings.
Yeah, so I'll explain a little bit at least how Balrampur is looking at it.
Okay.
So we have as well a a dual feed distillery. So that is already running on maize as of now. It's running on sugar and it's running on maize in the distillery section. So a company like ours actually has a lot of flexibility, wherein we may not have as large an impact on the H1 of FY25 as others might, because we have a lot of flexibility and moving parts. I would say that yes, definitely our distillery capacities would be underutilized for the first half of the next financial year. But if the sugar, the sugar prices should hold, and I think in totality, honestly, I haven't thought about the impact on H1 of FY25, but it shouldn't be very bad because we have had a higher crush and we have had higher recoveries. So all in all, I'll tell you, it's actually a good season for Balrampur. We've grown in cane crush by 10%, and the recoveries are also looking much better.
Just last word from you, Avantika ji. What do you see the recoveries looking at? And I just want to go back to your comment that you'd rather, work on ethanol or focus on ethanol and exporting sugar. As a proportion of revenue, do you expect ethanol to increase significantly? Can you give us some outlook there?
So we have a capacity wherein we can have around 30% of our revenue from ethanol. That's how it is laid out. Of course, it will not play out that way for this, this coming calendar year. But other than that, it should happen. I think we have 32 crore liter capacity for ethanol.
All right. We'll take a very short break. Thank you so much, Avantika Saraogi, Executive Director, Balrampur, Chini, talking about the business outlook. We're celebrating women leaders over here. We have an interesting and unusual story on the other side. And Niraj, I was very keen when we were planning the Women's Day coverage to speak with Ashwini Bhide, because Delhi had their Metro Man. Mumbai has our very own Metro Woman. She's going to change the face of the financial capital. The coastal road also comes under her. What has been her experience? When does she see all of this incessant digging in Mumbai actually turn into what we've been waiting for? Yeah, that is one of the key questions I've asked her. That interview playing after this very short break. Stay tuned. Seconds to go. It's fantastic. We're on top of the world. We're leading the change, and we have the support of all our colleagues.
Talented, supportive, happy. They empower men and women combined in the newsroom.
They are driving it, not just changing it.
Smart,
Fun yet intellectual.
radiating confidence.
Vibrant, effervescent, and stunningly intelligent.
Innovative, hardworking.
Multitasking, versatile, enigmatic, and very cheerful.
Tenacious, humble, and wanting to get to the depth.
They are much more talented. They are much more creative and innovative. And they are bringing a sanity in overall discourse that we are currently creating and consuming.
For decades, we've been hearing and talking about the Metro Man, that is Delhi's Metro Man. But here in Mumbai, we have our very own Metro Woman. On the occasion of Women's Day, while we of course talk about and feature women who are very successful in business, in the corporate world, the fact is that running and executing a large project, a developmental project, is perhaps even more challenging. And today in this exclusive interview, I'm speaking with Ashwini Bhide, as she's of course Managing Director of the Mumbai Metro Corporation and Additional Municipal Commissioner of the BMC. So the Mumbai Metro Line 3 and the Coastal Road is something Ms. Bhide is going to deliver to the financial capital of this city. Thank you so much, first of all, for speaking with us here on NDTV Profit on the occasion of Women's Day. I'm not going to start with the cliched question of how does it feel to be a woman IAS officer, because I'm sure in most cases it's the same as a male IAS officer. But to spearhead such big projects with the backdrop of political headwinds. So when you have a business, you have, risks. Here, in the case of such large infrastructural projects, the fact is that there is a plan, there is a goal, but you don't know what's going to happen in the next election. Is that the biggest challenge?
Yes, I think uncertain or uncharted challenges is something which is, I think I would term is at the biggest challenge. Because the project of this size, they already come with some inherent challenges. The size is huge. You have to implement these projects in a very, very crowded city like Mumbai. You need land, you need money, you need to convince people, and you need to actually take the risk related to construction and deliver the project safely. But these challenges are chartered challenges. You know what exactly this is going to be and you plan for it. But in these kinds of projects, there are many uncharted challenges which you have not anticipated. And dealing with them is one of the most difficult things, I would say. And we have faced many such challenges in this project. And that is something which, you have to decide on the spot what you need to do about it. And sometimes they get dragged. So how to come up with a solution, that becomes the most challenging thing.
RA Metro car shed was the biggest one. It became, I think, a cause for environmentalists.
Yes, that I would put it in this uncertainty box.
But
that kind of challenge.
You became sort of painted as the person who wanted to push it through and didn't care for the environment. How tough was that?
It was absolutely tough. But once you know what your goal is, then probably it is easy to deal with that. Because having a car depot at RA for this metro line is what makes that metro line really efficient and which can provide real service to the city. If you remove the depot from that area or that end of the metro, then the project completely loses its significance and importance. So if that is the importance of that location at that of the depot, then it was my duty to fight for it and ensure that the project is delivered to the city in the manner it was planned for. And that is why, but that time we had never thought that we will have that kind of an opposition from those sections of the society, because the procedure was already followed, everything was laid down. So this was some kind of an uncertainty which we faced, and we had to deal with it, and I had to take that tough stand, even at the cost of my personal kind of the problems which I had to face.
So you paid the price for that stand. For some time you were removed from the metro project, then you were brought back. All those uncertainties continue. How challenging then is it to now get back on track and ensure that this project, which is very, very crucial to Mumbai's transportation structure, is delivered on time?
There has already been a delay of almost 2.5 years to 3 years.
Because of RA?
Because of RA. Because that decision was pending. There was a stay for that location. And unless you have the depot location fixed and start working on the depot, it becomes very difficult for the rest of the project to get completed and get delivered. So my challenge when I went back was how to reduce that time within which we could complete the depot and deliver the project. Normally, depot would take 2 to 2.5 years to complete, the depot of this size. But we had to reduce it. We have to reduce the number of months which were required for the depot and ensure that the mainland and depot are connected. Because the depot was not there, our trains were partly ready at some other location, but they were not able to be brought here. So all those issues were there. All problems were revolving around the depot. So my job was to minimize those projects, push the depot in the maximum possible manner, which we have tried to do. And now the depot is almost ready. Depot connected, the depot charging is happening as we speak. Mainland, the main line is getting connected to depot. Our trial testing has started. And we are hopeful that in another 3 months, when we complete all our testing and certification, RDSO certification, ISA certification and CMRS. So by end of May or early June, the project will be ready for commissioning and it will be offered in the service of the citizens.
Okay, so by June, July, maybe
Yes.
we can, actually see this come to life. Now, why is this Metro Line 3 important in the larger picture?
This Metro Line 3 is one of the most important corridors of the overall Mumbai's Metro Master Plan. But the more importance of this project is this is the only corridor which connects the northern and central suburbs of Mumbai to the island city. This is the only corridor which comes to island city. All other metro corridors like Line 2, Line 6, even Line 7, they get connected to this corridor. Similarly, other public transport modes like the Central Suburban Railway, Western Railway, as well as both the airports, they get connected to this corridor. And that is why this is the corridor which goes into the areas which are today largely unconnected by any public transport. And these are the areas where there are multiple business districts and employment centers, educational hubs and even health hubs. The medical hubs are situated and people need to take this route, but by using multiple modes of transport, which takes longer time for their journey. And most of the times they have to travel on roads which are extremely congested. So their journey time is not only more, but the comfort and safety is also compromised. So this corridor provides the safer, more comfortable and more modern kind of connectivity to all these congested areas of Mumbai.